How much has this underpinned the disinflation, this idea that for whatever reason, commodity prices are going down, even though demand isn't falling off a cliff?
Yeah, it's been quite a trend, and as you say, Lisa, quite a surprising trend that we've seen the oil prices come off, and clearly many policymakers will have been delighted to see it. I mean, it's been a huge focus of the Biden administration, and they will be very comfortable to see oil prices back down where they are today. I mean, the question really is what happens next, and I think there's a certain amount of disagreement there.
Well, I haven't really read through the IEA's expectations for oil demand in 2024, but obviously it's lower in terms of, well, it's 50% lower in terms of growth, so 1.1 million barrels a day growth next year versus 2.3 today. What's driving the downshift in growth? What regions? Is this China?
Yeah, it is a China story, because the very strong number, and over 2 million barrels a day is a very, very strong annual growth, is really driven by the fact that China was the last major market to emerge from COVID lockdowns, and there was a real spring back that juiced oil demand more than you would typically expect. The 1.1 million barrels a day that we're going to see next year, according to the IEA, is by historical standards a very, very healthy number. And interestingly, although they were pretty downbeat on oil demand in the current period, in the last quarter of this year, they slightly revised up their expectations for demand growth next year, showing that, despite all the economic uncertainties, demand does remain fairly strong.
So, Will, take me through this. Production cuts will see OPEC Plus's share of global oil supply fall to its lowest since OPEC Plus was first, created like 7 years ago. Yet I'm seeing pictures of, bro handshakes between, Putin and MBS. Talk to me about Saudi Arabia's Vision 2030 initiative. I mean, can they afford these production cuts? I mean, how long can they last, and will they try to increase production in lieu of the current state of oil prices?
We spoke with the Saudi energy minister a couple of weeks ago, and he was very firm in his belief that the action they took at the last OPEC meeting will be enough to rebalance the markets, that they'd looked long and hard at what the surplus looked like in the first part of this year, and that the cuts that they're going to deliver, the additional cuts they're going to deliver, will bring the market back into balance. Moreover, he's seen there's willingness to keep cuts in place beyond the first quarter if they need it. Now, you make an important point, however, which is they are losing market share. And one of the most interesting things about the oil market this year, which has surprised people, is the strength of supply growth from America, from the shale industry. The shale industry has shown itself to be remarkably resilient. And when people expected it to slow, it hasn't slowed as much as possible. Whether they can sustain that next year will be fascinating to see. It's always the most important one of the most important things to look at when you understand the oil market. And clearly there's a risk for OPEC there, is that you get into a vicious cycle where you reduce production to keep prices high, and those high prices encourage more production from shale. So you keep stepping back on market share, and that's something that happened almost 10 years ago, where ultimately OPEC had to open the taps. Now, I don't think, talking to Saudi Arabia, they want to do that again at this stage, but there is clearly that danger. But their hope is these cuts and the additional cuts will be enough to bring the market back into balance and see prices rise.